Hello from the Dukascopy TV studio in Geneva. We're talking about Corporate Tax Reform 3 in Switzerland with Mr. Denis Berdoz. He is from Baker McKenzie here in Geneva. Welcome to the studio, Mr. Berdoz.
Thank you.
Could you give us an overview of this proposed legislation?
Yeah, this is a very important piece of legislation. It's a very important reform for the Swiss tax system. And there are different aspects to that proposed legislation. First of all, the legislation will abolish a certain cantonal tax regimes, which have been discussed for a very long time with the EU since 2007. Basically, the EU felt that certain tax regimes granted at the cantonal level were unfair, and that had to be modified or rather abolished. And these regimes are essentially the mixed or the auxiliary company regime, which permitted Swiss entities to pay a lower cantonal tax rate on their foreign source income. There was a principal company regime, which will also be abolished. The principal companies are companies with centralized functions, marketing their products essentially through commissioner or strip distributors outside of Switzerland. And then the finance branch regime, the pure holding regime will be abolished. And in addition to that, there would be an introduction of certain new elements which should be EU compatible and also OECD compatible, especially relating to the BEPS efforts, which is going on at the OECD level. There are probably three main measures which needs to be commented. The first one is the introduction of a patent box or an IP box. This is something that has been done at the European level since many, many years. So the proposal is to create a patent box, which is quite restrictive. It's modeled after the UK patent box regime. It applies only to patents. It doesn't apply to any other types of IP for the time being. And this regime permits to apply a lower rate on so-called the patent income. It is possible that in the future we have to keep that in mind, that perhaps companies like software companies, which are also highly innovative companies, but which do not really have patents in their business, could also benefit depending on how the OECD works will progress. But the patent box, basically what you have to do is you have to identify your IP income, and that's done by a basically top-down approach. You start first with your total net profit of the company. You deduct profits relating to finance activities, to other activities not related to the IP, and then you get to a residual income, which should be your IP income. That's the first step. The second step is then you have to determine what are the level of involvements of the Swiss company in developing those patents. This is a requirement. Only R&D expenses incurred domestically in Switzerland should create IP income that should be subject to lower taxation. So basically what you have to do is determine the R&D expenses incurred locally, developed locally, make a ratio with the total IP R&D expenses, and that ratio would apply to your IP income. And then the cantons can grant an exemption up to 90%. They are not obliged to, but they could go up to 90% tax exemption. In addition, the cantons are also free. Many aspects of the law give options to the canton, but do not oblige the cantons to adopt all these measures. But the cantons may also grant a higher deduction than provided today for R&D expenses, creating to innovation creation. The second aspect, which is a bit complex and technical, is the so-called step-up. And there are two aspects to that. The step-up is really the idea that when a company comes into Switzerland with already accumulated valuable IPs that were developed outside of Switzerland, then the company should not be taxed on these accumulated values outside of Switzerland, for instance, when it leaves Switzerland. So the company can appreciate or record the full value of the IP developed prior to coming to Switzerland, have a depreciation possibility, or keep it constant, and then could leave Switzerland without being taxed on these accumulated IP. The other one is taking into consideration that when a company changes from tax regime, basically from a privileged one to an ordinary one, then the accumulated value should perhaps be taxed at a lower value. And there is a system permitting to value the goodwill created by such companies and have a system of taxation over the next 5 years, following years, which could permit to apply a reduced rate, if the canton wish so, because they still have the possibility, on a portion of the future profits incurred by the company for the next 5 years, which would be basically a transition into a new taxation, full taxation regime. The last point, perhaps there are different aspects, would be the abolition of the issuance stamp tax of 1%. This is a federal tax levied on contribution to capital of Swiss entities.
When is this new legislation likely to come into effect?
The legislator has a very ambitious planning. If all the debates go smoothly at the level of the parliament, the hope is to have this new piece of legislation entering into force in early 2017, always subject to a possible referendum, which is something that could still happen in Switzerland. But if there is no referendum, entry into force early 17, the cantons, which are essentially concerned by all these measures, have a 2 years period to adapt to the new legislation, so that at the cantonal level one can expect an entry into force of these new measures by year 2019. Of course, the timing is still a bit subject to uncertainty, but that's a little bit the plan.
So you mentioned the cantons, it's a federal act, so are the Swiss cantons, can they contemplate additional measures?
Yeah, but essentially rates. I mean, the cantons are sovereign. They can adopt the rate of taxation they basically wish. And a number of cantons, especially in the French-speaking canton, Vaud, Fribourg, Geneva, have the will or the intent to reduce the cantonal tax rates to all companies, not only to specific companies, which was the issue of the old regimes, which were contested by the EU, but have a global tax reduction for companies. This also has to be approved politically by the parliament, and the canton of Geneva has the proposal was made to reduce the income tax rate to 13%, 13% being cantonal and federal tax included, but this is essentially a tax reduction taking place at the cantonal level, so a 13% target. These auxiliary companies today, they pay approximately 11.6%, so this is a slight increase for those companies, not a dramatic one, and that would be a bit decreased for companies which today are taxed ordinarily. Canton of Vaud has an objective of 13.8%, about the same in Fribourg, so that's the other trend going on at the cantonal level, which explains also, by the way, why the cantons want flexibility for the federal measures, because they obviously don't want to be forced to grant maximum relief on the IP box, perhaps, and at the same time have a reduced rate of 13%. So basically, if the 13% reduction goes through in Geneva, one can perhaps expect that on certain of the measures which will be adopted at the federal level, that the canton of Geneva would be probably a bit less generous, again, because it has reduced the rate. Perhaps the last point, because this is something which may again surface in the federal piece of legislation, which has been discussed for quite a long time, is the notional interest deduction, which permits Swiss companies that have excess capital to apply a notional deduction of interest rather than being, indebted. They have accumulated equity and they are self-financed, so they could have a notional interest deduction. That's something that was eliminated by the government based on a consultation procedure, but there are still efforts to bring that back into the legislation. And here also the key point would be to, if we have it one day, if this is voted by the parliament, to make sure that the cantons can apply it or decide not to apply it. Again, having some flexibility in how far they want to go.
Thank you, Denis Berdoz, for being here today. And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a good day and see you next time.